Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is how to prepare a statement of cash flows from balance sheet and income statement. We have two previous videos about cash flow, one about direct method and the other one about indirect method, and they are in our video description. So the focus of this video is on the prepare of the statement of cash flow instead of telling what it is and so on. Okay. So statement of cash flow required for each period provides information about cash, and cash we refers to cash plus cash equivalents and restricted cash. And we have three categories here: operating, investing, and financing activities. So let's go one by one. Operating activities, inflows and outflows of cash that result from activities. So activities, what are they? Cash inflows, sales of goods or service, interest and dividend from investments. Outflows, purchase of inventories, salaries, wages, and other operating expenses, interest and income tax. And here, interest. In the US GAAP, it is operating. Uh, International accounting, you can choose either operating or interest inflows, investments, and interest outflows financing. But operating, everybody considers it as right. So here, what do we have? Sales, salaries, operating expenses. We are talking about income statement. However, income statement, it is also related to current assets and current liabilities. For instance, inventories is current assets. Sales, if we sell it on credit, it is accounts receivable. Salary, wages, and other operating expenses, if it is on credit, we are talking about current liabilities. So here we will combine current assets, current liabilities, and income statement. Okay. And then we have two methods. Direct methods. It is the basic cash flow. Inflows less outflows. So let's go to this one first. So here we have some data. Skyping portfolios provide investments, and this is our income statement. So this is a service companies to make it easier and faster. Service revenue, operating expenses, gain on sale of assets, income before income taxes, net tax expense, and net income. And here we have our current assets and current liabilities. Cash, accounts receivable for current assets, accrued liabilities, and income tax payable for current liabilities. And here's some info. Common stock, we will not be working now. Long-term investments, not be working now. Cash dividends paid, not being working now. Has no outstanding debit other than those payable. So we have no hidden info here. And operating expenses, 30,000 in depreciation expense. Remember, guys, we never pay depreciation expense. So this is a non-cash expense. Okay, direct method here. Let's delete this one here, and delete this one here. And let's delete all of these numbers here, and also these numbers here. Okay? So what do we have? Cash received from customers. We have here $900,000 as service revenue. However, we have no idea if it is received or not. However, we can combine with accounts receivable and then we will have it. So how do we do that? The easiest way is working with the T accounts. So accounts receivable, beginning balance, $100,000. So here, $100,000. Ending balance, 120. For sure, this journal entry is not balanced. And here is the ending balance, and this is the actual ending balance, or the real ending balance and the actual ending balance. We have revenues, service revenues. Let's consider here all our revenues on credit. So debit, accounts receivable, and credit, say service revenue, $900,000. It is not balanced here, $1 million, and the actual ending balance is 120. So we need a credit to balance it. There is only one credit. Let's find it. Equal sum of our debits less ending balance, 880. What is the usual journal entry for credit on accounts receivable when we decrease accounts receivable? When we receive it. So we can consider this 880 as cash received from customers. And here is the sum. An increase or decrease in cash is the combination of operating activities, investing, and financing activities. Operating expenses, cash from for operating expenses. We have the accrued liabilities. We will have the same operating expenses here. We have no idea how much was paid. So we will consider everything on credit, and then we will find the number uh, balancing our journal entry. Accrued liabilities, beginning balance, 60. Ending balance, 70. We credit operating expenses, debit operating expenses, credit uh, accrued liabilities. So 700. However, $30,000 of this is depreciation expense, so a non-cash expense. So our number, there will be 700 less $30,000. It will be 670. It is not balanced. It is 730. We need to balance, so we need to debit it. And we debit a liability when we pay it. So equal sum of our credits less ending balance, 66, 60, 100. So this is so negative because it's paid. So statement of cash flow, we work with positive and negative numbers. And income tax, the same. Beginning balance, 15. Ending balance, 10. Income tax expense and income tax payable. We usually pay it the following year. And we need a number to balance. So let's copy and paste the same formula here. And we will have 55. So negative 55. 165. And what about the indirect method? Net cash flow is derived indirectly by starting with reported net income and working backward to convert that amount to a cash basis. How do we do that? So let's start it. Let's delete it here. And we need to that one here. We have another one here. Perfect. So we start with net income. So equal here net income 160. Adjustment for non-cash effects. So we need to exclude from this number our depreciation expense, that is a non-cash expense, and gain on sale of assets, a non-cash revenue. So to exclude it, we need to add expenses and exclude our revenues because depreciation expenses was subtracting our net income. To reverse it, we need to add. The gain on sale of asset is the opposite. It is adding our net income. We need to subtract it. So depreciation expense. Oh, depreciation expense 30,000 Oh, we have one number is wrong here. It is 60 here. It is 40 here. Okay, now we have the right numbers. So depreciation expense, we need to add it. $30,000. We don't have this in any cell. We need to deduct the gain on sale of assets. Gain on sale of assets, $10,000. And now the changes in the balance sheet. Let's come back to our direct method here. It's easier. Accounts receivable increase $20,000. So it means that our receivement is 20,000 below our revenue. So when we have an increase in assets, we have a decrease in cash because we are not receiving this cash. It is in our other assets account. For instance, accounts receivable. So increase in accounts receivable, it will be negative ending balance less beginning balance. So it is decreasing our cash in 20 because it is not on cash, it is on accounts receivable. Liabilities is the opposite. Here, increased accrued liabilities. It means we pay $10,000 less than our operating expenses. So when our liabilities increase, our cash increase because we haven't paid it yet, and vice versa. So here we have an increase in accrued liabilities. So it will be ending balance less beginning balance. And decrease in accounts payable negative because it is the opposite effect. Ending balance less beginning balance. Wow, sorry, not negative. It's positive here. Ending balance less beginning balance. Then the number will be negative. So 165 matches with 165 here. And from now on, everything is the same. So we will be doing only the direct method because it is the same. Okay? Let's go back to our PowerPoint. Investing. We are talking about long-term assets. So inflows, purchase, outflows, sales. And also when we uh, loan money to other entity, it is usually also a long-term asset. And then when we collect it, it is inflow. So let's check what kind of info do we have here. And usually, investing and financing activities, we work with additional info. We don't work with balance sheet or income statement anymore. Here, for asset long-term investment, were sold for $50,000 in cash. Original cost of this investment was 40. Original cost we have only for the gain or loss. It doesn't matter for our investing activities because what changes cash? What changes cash is for how much you sell it. So you sold for 50,000 in cash, 50,000 in cash. So this is then, and we have no purchase here. Cash flow from financing. Inflows when we sell shares or when we sell stocks. And from credit when we borrow money. So here we talk about long-term liabilities and common stock or stock capital, depending on where you are. Okay, and also the outflows when we pay dividends. So we also related a little bit with retained earnings. And when we repurchase our own shares or own stocks, it is also an outflow. And when we pay our long-term liabilities. So let's go here to our cash flow. Common stock was issued. So here we have an inflow. So an inflow here, issuance of common stocks, $100,000. We have no long-term liabilities here, but we pay 80,000 in cash dividends. So 80,000 cash dividends. So pay it, negative number, $80,000 here. So the increase or decrease in cash is 235 when we combine our three positives activities here. How do we add it? Beginning balance of cash, January 1st, 70. How do we know if it is right or wrong? We combine it. The sum increase in cash plus beginning balance, it must be the ending balance. So it must be here a green one. It must be our ending balance. If it is not, then our statement of cash flow is wrong. And the same indirect method, we just follow the same. So we copy and paste from our direct method here because we have no changes. And if we have non-cash investing or financing, we would add it here below only for info. For instance, I purchase a new equipment and I will start paying it in 2 years. So I will invest money from financing but no cash. So it doesn't go here. It goes here on at the end of our income statement. So it doesn't go there on the statement of cash flow. It comes here right below it. Okay, guys, so that's it. Thank you. Please subscribe our channel, like this video, like our Facebook page, Accounting Hub by Dr. Scarping. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day.